Good afternoon, traders. This is Tony D from the easyMarkets dealing room in Sydney. With an update for you today. A very eventful Friday. NFP did come in a little weaker than expected. It caused a little bit of US dollar selling. That was reversed though later in the day as the US dollar got stronger. But the big thing that really got the markets moving on Friday was the dollar CNH reversal. This came as China imposed reserve ratio requirements up to 20% from zero. Really costs the speculators now to speculate against the Chinese yuan, and that is by tying up 20% of the size of the trade there that they're looking to do as capital, and that's paid zero interest. So that's why the cost of doing these trades is increased. There has been a reversal and then some more selling today in Asia, and there hasn't really been some follow through just yet. But you can see exactly when this happened, what happened with gold, which is the big mover on the back of dollar CNH at the moment. What happened on gold on Friday was that nice big rally there, all the way from 12.05 up to 12.20, and then still looking pretty strong today as well, buying on the dip so far. Now, in terms of whether the bottom is in, whether China-US trade wars have reached a climax in regards to dollar CNH, that is very doubtful given the rhetoric is increasing and more aggressive, and neither side looks like they're blinking or backing down just yet. China's threatening to put another 60 billion on tariffs on US goods. US has obviously talked about increasing the tariffs to 25% on the 200 brand, but more importantly, in weekend press interviews, a lot of the US officials were talking about the determination of the US to make China suffer or change its ways, and then from the China side, the accusations of US bullying and that they cannot back down was pretty adamant as well. So negotiations should be still happening in the background, but on the face of it anyway, both of them are looking to look strong for their local constituents, and that is where you're seeing this standoff currently stand. But some moves by the Chinese to stop the yuan weakening was taken very positively by the markets, and you can see the stock market in general is on the front foot, even with the weakish unemployment number. That wasn't seen as anything to stop the stock market, which had another good day on Friday. The Dow back at 25.5 at the moment, which is close to those previous highs last week, and so the market is able to bounce back from increased trade jitters much more aggressively and quicker than previously. It's only the US dollar really which is being able to hold gains based upon those trade jitters from the safe haven effect a little bit more persistently. US dollar index is being very sticky now on that 95 level, and the reversal that we got on Friday couldn't stop the bounce getting back here again. So we're coming into this week at these levels, at these key resistance points. It might take something a little bit more to get the US dollar to reverse, and if it was to continue higher, then you would have the euro and the pound breaking some levels. The euro in particular is on a lot of view here, with the 115 level hasn't been broken so far this year, and has been tested twice before, and so this could become a bit of a major theme here to this week if it was to continue the US dollar being stronger. A reversal from this point would be seen as potentially just a short-term bounce until we can get back above that 116.20 to 50 level. But in terms of this 115 level breaking, the next downside targets, and if it did break, there's probably dollar index is breaking 95 convincingly, then the 115 you would have to go back towards 112 to 110 to get any more significant support, and that could happen. And a little bit surprising to the market, who was not positioned this way. Market still has a lot of positioning towards euro strength in the future, so the ability to catch it off guard and any sort of breakdown here by the euro would also lead to further strength against most pairs. It's very hard for the euro to drop and for the rest of the majors not to go with it. So it is something that you need to watch regardless of what you're trading. And you're seeing this euro now in focus with the price set at that 115.60, only 60 pips above that key level. Alright guys, no data today from the rest of the world. We do have the RBA tomorrow. This kicks off a few central bank meetings this week. RBA is very much on hold, has been on hold for 24 months, and what will be interesting though is if there's any dovish inclination regarding the intensification of trade wars, or if they, from the bullish point of view, if they start to appreciate some of the local employment data which they've been eyeing it as more and more important. Whether they were to take that as improving, given that huge print that we saw last month, 50,000 jobs last month. We'll see if that improves their outlook tomorrow. Other than that, though, it should be very much a non-event in terms of rate hikes or rate cuts, and shouldn't be too much change in the guidance either, as they've been extremely neutral for the past few months, and it's unlikely to change that given the balance of risk going forward. We'll have an update a little bit more on that tomorrow, though. Before the announcement, you can come through on the contact details below. If you're not a member of the Easy Markets Dealing Room and you do want to have a chat about some of the pairs in play right now, sign up on the link below and we can have a chat after that.